Welcome to Looking at the Markets with David Modell. Today I wanted to discuss ATR, Average True Range. Now, Average True Range is an indicator and it measures volatility. The volatility of a stock or commodity or ETF or whatever, okay? And by volatility, how big is the range of its movement? Does it make big moves? Has it been making big moves lately? Or has it just been kind of going sideways or just not moving very far? And when I say big moves, it could be to the downside or the upside. Either way, it's volatility, whether it's big moves downwards or upwards. And so it's the average of this. All right. And by default, the average true range will measure the size of the most recent moves for the last 14 periods or 14 candlesticks that are being measured on a candlestick chart. So let's take a look. First of all, we're going to look at very briefly at the calculation, the formula, which it's from stockcharts.com. I want to give them credit. There it is. In case you're interested, how to get the average true range. I think knowing the formula is not necessarily the most important thing. Just understand that on its default settings, it's divided by 14 because it's 14 day. But they can adjust it. You can adjust it for different periods. If you want it to look back more than 14 days to get the average volatility, or less than 14 periods, okay? So there it is. There's a formula in case you're interested in that. All right, but I'd rather look at some examples and show you how it can be used. For me, if I'm going to use it, mostly I'm going to use it for options trading, knowing when to sell calls or sell puts, or call spreads or put spreads. If you want to limit your max loss there, you can use spreads. All right, so here's an example, and this is from stockcharts.com. Want to give them credit. And here is a daily candlestick chart. So as you can see, it can be used for swing trading with the daily candlestick chart. Each of these candlesticks represents 1 day of price action. And here it is, the average true range. And by default, it's on the 14 period. And how do you get that? Well, on stockcharts.com, you go down to indicators, the indicators section, and you go through them all and you look for average true range, ATR. You put it up there. It automatically puts 14 period for you, but you can change that if you want to. And then you click update. All right, so there it is. I already did that for you. And this is Tesla. And when the volatility becomes extreme, when the size, the average recent size of the move, of the candlestick moves in the last 14 candlesticks becomes extreme, that's when I like to sell options, because you get paid a lot more when volatility picks up, as opposed to if you try to sell options when the stock is just kind of drifting or going sideways. So when the average true range reached an extreme here, when it went way up to nearly the top here, because there was such a large series of down moves in the last, at least at this point in the last 14 periods, it really went down sharply and fast. That's volatility picking up. And so if you want to use the indicator, you could say, okay, if this gets up to a certain point, just pick your number or pick your level. When it gets up past or at a certain point, you could say, I'm going to fade the move. If it's a big downward move, when volatility picks up and the average true range goes really high, then you can sell puts. Imagine if you had sold puts right when it reached here, okay? If you had sold out of the money puts, maybe here when it went down to about 308, if you had sold a 290 put or a 295 put, maybe even a 300 put, 300 strike put, if you don't mind more risk, you can pick your strike price here. You would have done quite well, because then things calmed down and it even drifted upwards quite a bit, okay? So if you had sold an out of the money put option here, okay, below, if it went down to 308, if you sold put options at a strike price here, you would have profited quite well. All right, and again here, volatility picked up, and you could have sold, since it went down so much, you could have sold a put option with a strike price of 300, 290, 295. you pick it and you would have profited again because things calmed down, the investors calmed down and stopped dumping the stock, and it went right back up. All right, so that's an example with Tesla. Let's look at another example with Nike. Now here's an example where the average true range can reach an extremely high level, not because the stock went down a lot, but because it went up a lot, okay? So you can sell a call option in that case. So if you decided, okay, when the average true range gets to a certain level, when it gets almost up to the top, I can fade the move again. And so it reached around, let's say, 59 and 50 cents. This is Nike stock, daily candlestick chart. You could have sold let's say a 62.50 strike call option, or even a 60 strike call option, but I recommend going out of the money, so I would have sold probably a 62.50, maybe even a 65 strike call option if I were if I didn't want to take on so much risk. And you could have made money there because after that the volatility, it calmed down, as you can see in the average true range, because the stock price stopped going up so quickly. Volatility calmed down, it went down, and the stock just kind of fizzled out and chopped around sideways, and it even went down after that. Okay. So you can fade the move either to the upside or the downside. But average true range will tell you when volatility is really reaching an extreme level, and that's a time when I like to sell options. You can also use this for day trading, or intraday trading as they call it. This is tradingview.com. And you can use this. This is a good one for many time frames, but it's a really good one, I think, at least, for day trading. This is Apple, and it is a 5-minute candlestick chart. Each of these candlesticks represents not one day, but only 5 minutes. And you can see, again, you put on the average true range, okay, and you can do that by going to indicators. It's right here. It's a little chart looking thing, and you would click on that, and then you would click on average true range, and that would give it to you. All right, and it would put it right here. And as you can see, volatility reached an extreme level. You just pick how high you'd want it to go before you can possibly sell put options or call options. In this case, you would fade the move. By fade the move, I mean it goes a lot, goes way, way, way down very fast, and you decide, you know what, I'm going to bet that it's going to either go upwards or at least sideways, or perhaps downward, yes, but not much more. So you could have sold an out-of-the-money put option here below where it was, make the strike price below the current price, and let's say you put it, down here, and you would have done okay because it went, it just kind of drifted around. It didn't go down much more. All right, so again, when volatility really picks up, that's a great time, at least I think it's a great time to sell options. But be careful, don't get extreme when it comes to selling options. Sell only a small number of contracts. You can make them option spreads, vertical spreads, calendar spreads, whatever you like. You want to limit or define your risk at all times, and don't ever bet any money or gamble any money that you cannot afford to lose. All right, and please make your own decisions. All right, so that's what average true range does for me. I'm sure it has other uses, but this is the only use that I've found to be extremely reliable, because it is just a volatility indicator. Notice that it is not a directional indicator, because over here the average true range went up, but the stock went down. Over here the average true range went up, but the stock went up. So it's not a directional indicator. Please do not try to use it as that. Some people use the average true range to indicate that there's strength behind a move, that there's conviction behind a move. But personally, I think that a better indicator for that in many cases would be just volume. Just put the volume up on the chart and use that as a strength or conviction, to indicate that there is in fact strength or conviction behind a move or lack of it, as opposed to average true range. Although, if you do use average true range as a conviction indicator successfully, that's fine. I'm not against it. I just prefer to use volume for that. All right, so I hope this was helpful to you. And if you need more help with trading or investing, my name is David Modell. You can contact me anytime by email at davidmodell@gmail.com. If you like this video, please give it a thumbs up on YouTube. And please leave comments and subscribe to my YouTube channel. That way you can receive the latest updates on my financial educational content. Thank you so much for watching and listening, and I'll talk to you again soon. Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.